Austin, are you kidding me? Oil prices hitting their highest level since last January, closing above $60 per barrel for the first time, by the way, since the early days of COVID. And with more harsh winter weather expected, can we see, or can we expect to see, oil prices continue to rise? Let's bring in Andy Lipow, Lipow Oil Associates President. Andy, you're in Houston. It never snows in Houston, but if you look outside your door, pretty winter wonderland out there. What is this all doing for the oil and gas as far as production?
Well, it's not good news for the oil and gas production. We're seeing in the Permian Basin about 15% or nearly 1 million barrels a day of crude oil production is offline. But more importantly, about 40 to 50% of the natural gas production has gotten frozen in. And of course, that natural gas is used for power generation. And this is happening at the same time that the wind turbines in West Texas have been frozen due to the cold weather, further impacting electricity demand supply. You put all that together, and now we've got refining problems because refineries certainly don't like the cold weather. And we have about 7% of the nation's oil refineries now offline due to the cold weather. And all this adds up to higher gas prices.
A big jump in prices, Andy, or just a continued slow moving up?
Well, I think this is going to be a continued slow moving up. We saw today in the futures market, gasoline prices were up about 5 cents a gallon on the back of this weather. But we do have a significant amount of inventory available for the upcoming summer driving season, which would temper any further increases, or big increases, I should say.
And if we can just change the conversation to policy coming out of the White House now with the Biden administration with regard to pipelines, you say that the battle to keep fossil fuels in the ground has moved from fracking to pipelines. The fact that the Keystone got shut down and others may be to follow, what does that do to the price of oil? Does it have any impact on the consumer?
Well, eventually it does, because the United States is connected to the rest of the world as far as oil demand goes. And whether Canada gets its oil out of the ground and ships it to the U.S., or the U.S. buys from some other place, most notably the Middle East, the demand is still there. If we look at what's known as the Dakota Access Pipeline, where the judges ruled the Army Corps of Engineers needs to get an environmental impact statement, the market is worried that that pipeline might shut down, shutting in about half of North Dakota's oil production. And that, of course, would impact prices throughout the Midwest.
It would indeed. We'll have to leave it there. But the message, I think, from Andy is that prices are going up. So get used to it. And by the way, that white stuff out the front door, it's called snow. And it's kind of fun, not unless you have to drive on it. But anyway, Andy Lipow, thank you so much. Appreciate it.